Right, so now that we've looked at the theory of flip zones, as always, now it's time to actually, apply those theoretical concepts to see how they actually play out in reality. Because of course, we're not always going to get those nice, perfect utopian examples in the market. So if we just go back to the chart layout that we've been using thus far, right, as we've been building upon these with each concept that we've looked at, your chart may look something like this, right, with having your structure mapped out and your structural supply and demand zones drawn on. So we're not, of course, not going to go through every little bit of price action and draw on every single zone, but I'm just going to kind of go through reasonably briefly and kind of just show you how we can validate some of these structural zones even further by looking at potentially if they caused an S&D flip as well. So if we just look at this zone here, right? Now, and imagine in the live market, we were at this point back in the start of 2018, and price was approaching, making sort of new highs up here, right? Weekly chart is clearly in a bullish market, right? High, 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 low, high, high. And we would be looking after we had that weekly break of structure where potentially the weekly may want to start to pull back, or of course, potentially reverse, which is what ended up doing. So what do? We look left and we look at potential supply zones, right? Now there can be supply all the way up this leg, right? All the way up to pretty much this swing high here. So how can we increase the probability of knowing which one is likely to hold and have a pullback? Well, of course, this is kind of the last buy before the sell that actually led to that previous break of structure. So that's a pretty decent zone. It is the decisional zone, but does it actually cause an S&D flip? Well, this is where we have to look left and start to build the story a little bit, okay? So if we look at this piece of structure down here, what do we have? We had the buy before the sell that kind of broke that more minor low, okay? So we obviously have some weekly supply there. So if I just refine that kind of whole range just to that last pivot candle there, and then we have some weekly supply. So then what happened when price came into that supply? Price pulled back, it reacted. Remember, the reaction is key. It tried to make a lower low, but then boom, right? The demand stepped in order to take out that supply. So now we have a supply to demand flip, right? So now what we can do is draw on that entire range, right? From the reaction to the low point of the reaction, and then we can draw that across as demands that may be used in a future point. So then when we drag that across, what can we see, right? Price came down here, had a little bit of a reaction, and then eventually this pivot here, right, that last buy before the sell candle is where then the supply stepped in to take out that demand and take out the actual structural low. So that is literally just what those flips are, just kind of building the story. You can go back as far as you want and literally just see how it's just a constant exchange between supply and demand until one is in control, right? Until we then come down lower before the buyers start to step back in again. I mean, even quickly just down here, what did we have, right? We had the supply zone down here, right? From that pivot candle, price comes into it, right? It's a very subtle one, but it's a bit more of a small reaction, one bearish candle, and then boom, the demand steps in, right? So at that point, the reaction fails, but it takes a little while before you actually get that change of character up there. So what does that mean? It means that we can then use this candle here as a potential flip, right? And then we do see, a reaction is a short-lived reaction, right? We never know how big the reactions are going to be, whether it will be just a small bounce or a bit more of a sustained pullback or even a reversal. That's obviously why we have to pair it with a hell of a lot of other confluence, right? Market structure, multi-time frame market structure, yada yada yada, all the concepts that we have been looking at. So yeah, that's pretty much just the basic premise of it. Let's just kind of go to the more recent price action and have a look. I mean, even down here, right, there's just flips going on constantly, right? So we obviously have this buy before the sell that takes out this low here, and then what happens pretty much the next few weeks, price pulls back into it, it tries to make a lower low, it fails to do so, fails to take out this low, and then the demand steps in to take out the reaction, and it leads to that break of structure, right? So we get a lot of demand comes in that then starts that new bullish trend. So yeah, at some point, literally anywhere within this entire range, so from the reaction point down to this low, is a valid flip zone, right? It's quite a large zone. Obviously, we can be aware of it even when price ever reaches back down here, or you can start to refine it to even that kind of last pivot there, or potentially even the inside bar, right? So on and so forth. Or maybe you want to do the last fractal refinement. So if this is the reaction point and we want to look at kind of where that last bit sort of failed, you could be then looking at those buy to sell wicks here, right, which should probably be a bit clearer on the daily, or arguably even potentially that last little bit up here. But you can see, all of those that I've just drawn are all valid, whether you take the whole range, you take the little pivot, you take the inside bar, or you're going to take these buy to sell wicks. But obviously the more refined you go, you may as well kind of use multi-time frames to your advantage at that point, right? This is more a skill set you would need if you, for whatever reason, you were locked into one time frame and you couldn't drop down. But because we do obviously have the benefit of being able to drop down time frames, this is when I'm personally just a little bit more looser, and I'll just take a larger range like that, and I'll just be aware that when price comes into here, then I know I'm within a larger weekly demand zone, right? A supply to demand flip, and then I'll drop down the time frames to obviously help refine those turning points in the market. So yeah, obviously that pretty much brings us to the current range we're at. So let's just jump down a time frame and take a look at the daily chart. I'll look at some of the more sort of obvious flip zones. So yeah, if we kind of track back again a little bit and we look at this sort of supply zone here, this daily supply zone that took out these lows here, right? So it's kind of the origin of that move that came down and then broke those lows. It was obviously mitigated a bit with this wick here. So what can we do? We can refine it to the fractal wick there. And then if we drag it across, what happened? Price came up into the supply zone. It tried to make a lower low, right? We had that bearish pressure come in. That's the reaction. And then boom, the demand stepped in. So before we already had this demand zone drawn on, right? Just as the decisional that caused the break of structure, but it just gives a little bit more weight to it now because it actually took out a valid supply zone, right? Because that reaction validates that the supply zone, is worthy, right? Because it tried to, you can see the bearish pressure coming in as those sell orders are filled, but then demand took that out, right? So that's where we get the supply to demand flip, and then this gives us a decent reaction to play that daily pullback, right? I mean, they just occur pretty much everywhere. So let's just start from the top of the price action that we've been going through. So even this one's a little bit more advanced. It's a little bit tricky to see, but just kind of rein this in just so we can kind of focus on the actual price action. So if you think back in the live market, right, as price is moving up and then it pulls back and then it comes up here, right? This inside bar means what? It means a bit of a range on the lower time frame, and then price comes out with this bullish candle. So we have broken a minor high there, right? So this will have created a very minor demand zone on that daily inside bar. So that's what I would have drawn on at that time, right? Potentially expecting a small reaction as price then comes back down to it. Potentially price should try to make a higher high. So price comes into it, it reacts, right? Intraday, you can see on the fractal refinement, it tries to make the higher high with those buy to sell wicks. And then what happens? It fails, price comes down lower. So where you had this very minor sort of inside bar demand, price comes in, it reacts, and then the supply comes in to push through and give us that daily change of character, which is what that 4 hour break of structure would be to the downside, right? So then you have a potential flip supply zone here. Price doesn't use it then, but remember, old supply zones can be used at any point in the future, so you can just be aware that it's there. And then if we drag it across, right, we can see it just missed it here, but then eventually price tapped into it to then start that next long-term daily reversal back to the downside there. All right, again, even when price action is not super clear, right, it's sometimes a little bit messy, but there's obviously going to be demand in that wick on a lower time frame. The daily reacts to it, pushes down, comes back in, there's your flip, and then we go even lower, right, and then we pull back from that flip zone that we looked at earlier. Yeah, just so on and so forth. It just happens all the time, right? Even down here, right, we have minor pullback. That inside bar creates supply because it takes out that minor low. Price then pulls back into that supply, right, the inside bar. It reacts and then it pushes up through. Then that old demand becomes used for later to then initiate this pullback here, right? So on and so forth. Yeah, I mean, I don't want to go through every single candle. There's obviously a lot more in here that I haven't drawn on. I don't want this video to go on for hours. But even, looking at the more recent price action, what did we have? We had this inside bar here, right? This steady supply. It took out this low here. Price came into it. It reacted and it pushed up through. So that's obviously bringing us to the current live price action. But this sell before the buy here, I would definitely be looking at that as a future, future demand zone to get a potential pullback or a reversal, obviously depending on how market structure is, if and when price, reaches that level. So I'll tell you what, let's jump down to the 4 hour chart and have a look even more. Let's go back to that daily flip zone that we were just looking at with the buy to sell wick. So just to give you a quick refresh of what I'm referring to, was this up here, right? When we got that first actual daily reversal, right? When we came up into that old daily and weekly supply. I'll just zoom in for you guys so we can definitely see it. because drawings are getting a little bit messy when we have them all drawn on. But remember, we had this inside bar that created the demand to take out that minor high. So price comes back into it, it reacts, and then it pushes down, right? So we can see those buy to sell wicks is a fractal refinement for what? For the lower time frames. So if we go and look on the 4 hour chart, I'll just scroll back across to that area. What do we have? It's going to be a little bit clearer, right? Because we can actually see the demand zone. So at that point, when the minor daily high gets taken out, what is that on the 4 hour chart? It's a 4 hour swing high. So it's that 4 hour swing breaker structure. If we look at the origin of that move, right, the extreme demand zone, pretty nice and clean 4 hour demand zone down here. So what happens? Price comes down into that 4 hour demand zone. It reacts. Remember, the reaction is key. It fails to put in its higher high. It fails to do its job. Then supply steps in, takes out demand, and causes that swing breaker structure there, which is what that daily change of character. So now what we have, we can obviously take the entire range, right, like that. Just drag that across. Or we could refine it to the last buy before the sell, right, because that's completely fresh. It's not mitigated. And then if we put that on, right, we can then draw that across, right? So this is where we could have helped us to time this move here, right? That daily move back then. But remember, you know, there's always a lot more orders within here. So even if sometimes a zone is just tapped on the distal, price can still use more orders within the zone later on. So if we drag that across, we can see that then that's where that daily reversal then finally kicked in. But remember, if this zone has been tapped into, the way we can refine this 4 hour zone to the part of the orders that are still fresh is kind of what the daily refinement then helped us with, right? Because if we then looked at the daily buy to sell wicks, we could see at that point it didn't quite touch it, and that's just another way you can kind of then refine that zone. But don't worry massively about that. It's a little bit more kind of, you know, getting lost in the detail here. It's, you know, it doesn't massively matter at this stage if that seems a little bit confusing. So I'm just going to delete that just to try and keep the charts a little bit yeah, a little bit more clean. So let's kind of go a bit more over to the more recent price action from kind of where we were started to play around with the 4 hour chart in the prior lesson. So if you remember down here, right where the price was bearish, we got that lower low. So we pretty much have that entire range, or you can refine it to, you know, even the wick, right? That 4 hour wick, right? Because you can see that's where the price actually pulled back. Now this is a point, hopefully if I haven't made it clear already, I'll make it clear again, of, you know, you're going to see supply and demand zones everywhere, right? And we know, you know, it can seem a little bit confusing at first because you may be asking yourself, you know, do I take the entire range? Do I try and take one candle? Do I do fractal refinements to the wick? And, you know, you can draw on multiple ones, but when you're in the live market, don't stress about it too much because you use price action to help tell you, you know, what price is reacting to. You just wait for it to happen, right? So at this point, you know, it's likely there's going to be, you know, I believe this was a daily inside bar candle as well. You know, it's likely there's a lot of 4 hour supply within here, but we don't always have to know the exact candle, the exact area in which price is going to react, because we just wait for price to show us the way. So when you start to see that 4 hour change of character, you would see in the 15-minute chart, the 15-minute chart starting to switch bearish, then we can look left and go, okay, well, actually, do you know what? Whoops, didn't mean to go that far. Well, we have let price action tell us that it's that, you know, that fractal wick that is being rejected, and then we can kind of refine wherever we've drawn our whole 4 hour zone on, whether, you know, we had the entire range, we can then refine it to that wick, because price action has told us that way. So don't worry, it's not this, you know, I don't have a super nice crystal ball and foresight of me knowing exactly which fractal refinement or candle price is always going to react to. I will usually have multiple drawn on, but then as price starts to react and starts to kind of, you know, confirm what I'm seeing, then you can start to kind of make those refinements with a bit more accuracy, right? And that is why we use confirmations and multi-time frame market structure to help us do that. But anyway, as we see price start to pull back, what should it do, right? It should go on to make a lower low. So then when we see price go up, right, what's happened? It's taken out the reaction. It's led to that 4 hour break of structure, which was a daily change of character. So now we know anywhere within this whole buy to sell range is a decent supply to demand flip zone, right? But of course, what we can do is refine that to this candle here, right, that 4 hour zone, and then obviously price just shoots away, so we're not going to use it then, but it can still be used at a later date, right? It generally will remain valid. So then we can use that flip zone, right, that 4 hour zone within this larger daily flip zone, because remember that zone we've just been looking at on the 4 hour chart is literally this price action here. So you can see how the time frames clear all of that up that we were just looking at. That previous 4 hour supply was this daily inside bar, right? Price came into it, it reacted, and it went off. So this is why you've got to use multiple time frames to your advantage. So, back in later on when prices come down here around July, and we know we have this daily zone here, we know it's a pretty decent zone to look for a potential pullback or even a potential reversal, we can go, okay, let's try and refine this even more. So just on the daily chart alone, you could just refine that to the wick, or we can jump down to a lower time frame. So that's when we'd go and investigate, right? This whole daily zone here, right? This kind of larger, slightly lighter grey box. I know it can get a little bit messy now. We would then look, okay, how can we refine this a bit more? Well, we can see that this was the origin of that 4-hour flip zone. So we could draw it on the candle, or, if you wanted to be even more refined, you could draw it to the wick, and that essentially would be your 15-minute zone. Which of course then you have to accept that price isn't always going to come down to the most refined point, but that's when you can see that 15-minute demand holding on later on, right? So then price reacts from here, and then what you get the buy before the sell, where demand flips to supply, and then we push down, and then price comes back into supply here, right? It reacts, but it fails to do its job, and then it pushes up higher. So then what you can do is then draw on your demand zone, right? So you can take the whole range or refine it to that last candle. So this demand should hold, right? Because it took out the supply zone. Price comes into it, right? It reacts, and then it pushes down. So then you have a fractal refinement within here, right? Where demand has then flipped back to supply, and supply is in control. And then boom, what happens, right? This was a news announcement where we had a bit of volatility and manipulation, but you can see, right? Even though the markets are random, we never know which way price is going to go and when it's going to go. But what isn't random is where a lot of those big orders are sitting in the market. So though we get this big volatile spike during a news announcement that happened back on the 18th of August, right, at 6 p.m, so probably around FOMC or something like that, what happens? Price spikes up, it seeks where those orders are. We know, we've just worked out, we've just painted the story of why these buy to sell wicks are relevant, and then boom, enough supply to continue that movement down, right? And then what we would have, this whole large buy to sell candle is in fact supply. Price comes into it, tries to make that lower low, and then flips to the upside, right? So now we have a 4-hour flip zone all the way down here, right? So on and so forth. Again, we've got this buy to sell candle here, right? A bit more of a decision in the middle of the leg, not the cleanest of zones, but it did lead eventually to that break of structure, right? So as price comes up into that zone, we tap into it, we react, we should try to make a lower low. We do spike that low, so we do get a 4-hour change of character, but it's not that convincing, right? It doesn't close below. In fact, this kind of, sell before the buy, this demand here, ends up holding. And what that ends up doing is actually taking out the reaction. So as we come up here, we now have a failed reaction, right, on the 4-hour chart. So it's not, at that point when we have a failed reaction, I've said this before, right, when we come up here, it's a good sign that this supply zone is going to fail, but it's not a guarantee, because price could come up, all the way up towards this wick, essentially fill up more orders, right? You can see here it tries to fill up more orders. You can see that selling pressure come in, but when we do get that first initial reaction failing, it just gives us a high probability that it will fail. It's just not a guarantee, okay? So when you see that happen, you see price try to go lower, it fails, demand is holding still, right? This demand zone is holding, price pushes up higher, it closes above that failed reaction. Then what do we have? We have a flip zone, right? So there's potential now that we can look for longs within here, right? And then we can try and target this higher high and potentially even higher, right? So on and so forth. So yeah, hopefully that starts to make a little bit more sense. Just go and practice on this on your charts, go through all the zones that you looked at, kind of the structural zones that you've drawn on, and just see, was there flips within there that can potentially validate the ones that failed, and the ones that worked, did it increase the probability, and can you just spot them even more? I mean, there's even a really clear one here on the 4-hour chart. So we're obviously clearly bearish, right? We create supply to break those lower lows, right? So we have the supply within here, price comes into that supply, right? It reacts, remember the reaction is key, it tries to go lower, and then price breaks up to the upside. So now what do we have? We have that supply to demand flip. Price then pulls back, right? We come in, we get plenty of time as we start to get those lower time frame changes of character, right? We break to the upside, there'll be plenty of buying opportunities to get in long. Now, if you can get this, you get that 4-hour pullback, pro trend into a flip zone, below the EQ, and you can get your lower time frame entry, you're golden. You've done the hard work. Now, what you want to be doing is targeting those 4-hour swing highs, and that is how you make a ton of percentage. And it's those trades, those pro swing trades, that is really going to give you not even those compounding growth to your account, but really those big, large quantum leaps, right? Where suddenly you're going to start banking those 20, 30, 40, 50R based on logic, right? Now, again, not saying these will be easy. You're still going to have to deal with the psychology of kind of, holding on to those big trades and trying to hold on as much volume as possible. And obviously these pro swing trades are not always going to come along every single day, right? but I can show you an example on every single one of these 4 hour pullbacks and these higher lows or lower highs in the bearish trending market of how you can get into them time and time again. So I'll tell you what, don't just take my word for it. Let's actually go through this recent leg of price action, and I will just show you session by session, right? It's the exact same things happen again, the exact same patterns that we've looked at in the theory module, right? Of how we just look for those pullbacks into our higher time frame areas of value, and then we look for our lower time frame confirmation, right? Flips upon flips upon flips. We just use more refinement and more refinement to get in, and then use our knowledge on the higher time frame structure to target those higher highs or target those lower lows. So what I'll do is I'll probably split this video into 2 videos just so it doesn't go on for super long. Yeah, and I will see you in the next one.